Okay, Gautam Sinha Roy of Motilal Oswal Securities also joins in for a fundamental view this afternoon. Gautam, hi, afternoon. What are you making or what are you recommending to your clients at this point in time in terms of a strategy ahead of the FOMC policy on the equity markets and even post based on any sort of permutations and combinations that you're working with right now?
Right now, times are quite uncertain, not only because of the FOMC meeting, while we don't expect some major move from the Fed, US Fed as yet, but the statement and what inferences investors globally will draw from the statements that the Fed or Mr. Bernanke makes will be quite important, and we believe it's best to be cautious at these times again. Although we are finding select pockets where we see some value emerging, but overall the market outlook continues to be cautious. Stay with good quality stocks in the pharma, IT, private banks as well as consumer facing names, which is where we continue to see traction. So we don't see any change in the broader market direction or sectoral preferences as of now, so we'll continue to remain invested in our preferred sectors, and that would include telecom too, where Idea is our top pick.
Okay, Gautam, hi. I was just going to get to that, whether telecom has popped up on your buy list or not. You said Idea is your top pick in that space. What is the target price that you have on Idea, and what are the key triggers? Because there's been so much news flow on the telecom sector. What are the key positive triggers that could lead to some perhaps some earnings improvement as well?
Yeah, Idea is and telecom as a space we have liked for quite a few months now. So it's not a new addition in that sense. It's just a continuation of our preference for that sector. As of now, our target price should be closer to rupees 160 based on fundamental valuation. But what we note here is that the competitive intensity in the sector is declining meaningfully, and the pricing power, which was at its bottom somewhere last year, is improving. So is the number of voice minutes available to the incumbents. Combined with this increased penetration of data, these three factors together will drive huge operating leverage for the sector, which should improve profitability very strongly. So the profit number is usually leveraged to all these factors, including revenue per minute and voice traffic, given that costs are more or less fixed. So in that sense, this is one sector where there could be a secular earnings growth across the board over the next few years. So from that perspective, we do like the sector, and we believe that even at these valuations there is good potential upside based on earnings revisions going forward, upward revisions in earnings going forward. So that's one theme that we continue to play. So in a nutshell, it's one of our preferred plays among the few sectors that we have continued to like for the last quite a few months. So overall strategy or sector preferences doesn't really change.
Okay, Mr. Tulsian, I had a quick question with regards to JSPL, because we did have the news earlier in the day that there has been a pledge by the promoter holding company to Credit Suisse, and there were those rumors doing the rounds with regards to a buyback, which is pretty much squashed at this point in time. But would you have a comment on JSPL and the news?
See, Ekta, in fact, we have seen the fresh pledge having created in many of the Jindal Group companies, though they don't belong to the same promoter. But yes, there was some market talk of the share buyback by the company. But I don't think that is likely to happen at this stage, because considering the expansion plan and the company already, having the debt in their books on the consolidated basis, I don't think that is likely to happen. And in fact, we maybe on the hopes of some or the expectation of some share buyback, we have seen the short covering, because stock was hammered heavily in this last maybe 10 days or so on that FIR filing, against the promoters news and all that. So probably the technical bounce has come into the stock, but even if the buyback comes into the stock, I don't think that can make the stock to move beyond a level which may be 255 to 260. But on the downside, I don't think that the stock really deserves to get punished further because of the technical reason, as I said, that the heavy shorts having built in the stock in this last 10 days.
Okay, that's JSPL. It was down and out a whole lot, and some rebound from oversold territory. Gautam, so many stocks in the broader markets have been completely smashed out of shape in the last couple of weeks, and Apollo Tyres is one of them. Even today that stock is down about 2.5% post that deal. At what price do you think that stock could stabilize at, and what would your recommendation be now?
We don't really cover the stock, so there would be no price recommendation. But one thing clearly that comes out of the deal is that it's a huge leverage buyout deal, the kinds of which the market doesn't really like in these environments and these risk-averse environments. And obviously the company will have to work really hard over the coming few years to pay back that debt, and which is when equity holders will probably start, after that, equity holders will probably start getting returns. So from a longer term perspective, if the integration happens successfully, there could be a big story there, but from a coming few years, from a cash flow to equity perspective, should be a challenge is what I think will be the case with Apollo.
Okay, very quiet for the Indian markets at this point in time, but the European markets, or maybe the German markets in specific, seem to be showing a little bit of more fervor as compared to us. So currently at the high point of the day for the German markets, up around 0.5%, but just about marginal gains which are coming in for the FTSE and the CAC. Extremely quiet trading session. All eyes are on tonight and what the FOMC policy will throw up. On that note, we'll take a break, but while we do that, let's get in some opinion. Let's hear out Dipan Sheth of HDFC Securities, and we'll come back.
My gut feel is that we've hit a near-term high on the markets already, and if you were to ask me what's going to happen tomorrow or the next week, I think that's difficult to guess, but a year out, I think we are heading into rough weather. I don't think there's money going to flow into the markets. I don't think there is going to be any meaningful uptick, so long as we don't see structural changes to the economic health. This is the time to watch inflows and outflows and then take a call on direction.
Does it look like there's more volatility ahead, or are you feeling relaxed about the market?
Quite frankly, I believe that this volatility has got entirely to do with the fact that we are now completely dependent on the vagaries of inflows and outflows rather than any meaningful fundamental change in our economy or in corporate performances. So everything is tied to mood swings, as it were, from global investors, and maybe that's not such a good thing for the markets. This is something we've been saying for a while, and I'm afraid it's now gone to a limit where things are really looking very dicey.
Dipen, what do you do with the rupee now? I mean, the same problem that affects the stock market also affects the rupee. I mean, are we going to see much deeper cuts in times to come, you fear?
I think it's difficult to say whether the rupee will go to 60 or worse, but the thing is that we have a structural problem with our CAD, and we've been living or persisting with this problem for a while. It wasn't so visible, or it didn't matter so much to the market so long as capital flows were holding up, and every time there's a little bit of worry on the capital flows, the rupee cracks. The spreads between the US yields and Indian yields adjusted for cost of hedging have also narrowed to a point where debt inflows will also not look meaningful or won't make meaningful sense. So I think there is and of course the state of policy evolution, the less said the better. So despite all the noises that we keep on making and the temporary fixes that the policy makers keep offering, raising FDI caps and then asking questions, so I think this is not a problem which is going to go away in a hurry. I think these structural solutions are what will drive the rupee back to some sane levels.
Do you see some of these high quality sectors or stocks, the 20-25 names which have held the market at a certain level, depend now at being at some degree of risk, because for the first time in probably 1.5 years, you're beginning to see some cracks in the global liquidity phenomenon, which has driven valuations in these stocks. Could they be at risk?
You need to keep a very close eye on what's happening in terms of the flows. So I suspect that ETF flows, for example, will completely be driven by global liquidity conditions, how Mr. Bernanke adjusts the liquidity taps, what plays out in the Eurozone, what kind of aggressive easing the Bank of Japan does, and what kind of slowdown plays out in China, and so on. And quite frankly, it's very difficult to outguess global analysts on what these factors are going to play out like. So it's going to be difficult to take a call.
Hi, welcome back. Well, it's picked up a tad bit of pace or incremental amount of increase for our markets at this point. Nothing to write home about because we're just up around 11 odd points for the Nifty and up around 35 odd points for the Sensex. But there is some amount of increased fervor which is coming into the mid cap. So there seems to be some amount of optimism coming in there, up around 0.6%, and the advanced decline ratio is holding on the advancing side. So that stands at around 2:1. But let's get talking more into the mid caps and see what exactly is buzzing within that space in our movers and shakers segment. Let's start with Pragya and what she has for us this afternoon. Pragya.
Well, thanks for that, Ekta. The stock that I've picked today is Indian Hotels. It's buzzing in the day's trade. In fact, the last time I checked, the stock was up almost 3.5%. We've seen a bit of pressure build up on that particular counter. In fact, the stock is down 12% if we just see for last month. As per a CNBC TV18 exclusive, the sources have indicated that the Indian Hotels open offer price for Orient Express may lapse. Now, just to put things into perspective, they had Indian Hotels had made an open offer for the company in November 2012. They had acquired 10% stake in Orient Express way back in September 2007, and in November they'd made an open offer for the company for almost $1.86 billion, which valued Orient Express at $12.63 per share. Importantly, the rules indicate that the company can withdraw or revise an open offer in the next 6 months with a 2 to 3 month additional grace period. The company has not modified the open offer price within the stipulated time, and on the back of that, this offer may lapse. That is what the sources have indicated. This has been a major overhang as far as Indian Hotels and Orient Express, both of these stocks are concerned. In fact, the company has been making losses because of this particular venture for quite some time now. In fact, its Q4 losses stood at upwards of 350 odd crores. So this removes an important overhang if the news indeed does come true. Removes a major overhang for the stock, and that is why we're seeing a bit of a respite coming in on that counter. That's it from me. Over to Nigel.
Thanks for that, Pragya. The stock that I'll be talking about is GCB. Now, that stock really was up and about because we did see at around the 2 o'clock mark, it was trading at around that 47 odd rupees, and then it soared all the way to around 54. Now, this is on the back of a block deal that did take place. The likely seller could be something like an Al Batin investment, which is in fact an Abu Dhabi-based party. Now, the total number of shares were around 73.9 lakh shares, and incidentally, that block deal did take place, and the quantity did match. So maybe one of the likely sellers could be this Abu Dhabi-based company. In addition to this, in 2007, this particular Abu Dhabi-based investment firm did hold around 4% stake. Another stock that was excited is South India Bank, and that stock was up nearly around 4% the last time I checked, because they do hold around 3.5% stake in DCB. So maybe some kind of notional gain. That's it from me. Ushang, over to you.
Well, thanks for that. I've picked up TTML. The stock is locked in its upper circuit with 10% on the higher side. The board actually has today proposed an issue of bonus shares to the public shareholders. Earlier, if we remember, previously we saw that the company promoters, which is Tata Sons, had gone through an OFS, but the OFS was not really successful. They were just able to do around 0.51% stake sale in the company, and this was due to the tepid market conditions which were at that point of time. Right now, this move, which is of consideration of the bonus issue, is mainly in line to match up with the SEBI minimum public shareholding norms. As of now, the promoters of the company hold around 77.21% stake in the company, and right now we are seeing good amount of volume being built up on the counter, a total combined of around 45 to 50 lakh shares being added on both BSE and NSE versus a 2 weeks average of around 37 lakh shares. On that note, back to you.
Okay guys, thanks so much for giving us those details. So those are all the stocks in focus. Mr. Tulsian, any thoughts on Indian Hotels and the fact that source-based information that the open offer for Orient may lapse?
See, Sonia, though the things are not really very healthy, at the Indian level also for all the hotel industry, but this has been a big overhang. For some reason, if they would have gone for the Orient Express, then that would have seen quite negative. We have seen the effect of that, has seen in the Apollo Tyres. I won't say that the impact would have been severe, but yes, this overhang has gone, and now this stock can, actually have some buying coming back, which can make the stock to move little higher on the upside from here on.
Okay, that's the view coming in on Indian Hotels. Gautam, would you have a view with regards to a couple of these banking hopefuls, and which one would you bet on in terms of possibly getting the license on a more as opposed to others?
There are quite a few contenders which look good. So, you'll have to really build a basket around that. Some of the obvious names that come to your mind would be the larger conglomerate-backed NBFCs that have had good operational track record, including Mahindra and Mahindra Financial Services. Bajaj Finance would be another name. L&T Financial Services, then IDFC would be another good contender from a getting a banking license perspective. Now the power finance companies like PFC and REC, for them getting a bank license would really help them from a longer term perspective, but it remains to be seen whether they would be considered. So quite a few names. LIC Housing Finance could be another name. So it's best to identify the good quality stocks around this theme and build a basket, and not only look at this possibility of getting a banking license, but also look at the business fundamentals and growth and valuations, whether they are in the right place, and then take a call. So that would be our perspective on playing this theme.
Okay. Earlier we had a guest in the morning, Gautam, from Motilal itself, who pointed out that the emerging market flows have picked up on the downside. So there's been quite a bit of redemption pressure that we've seen in emerging markets, both in debt as well as in equities. Considering the mood is so subdued in markets like India, do you advise putting in fresh money at this point in time at all? I mean, you've been talking about your recommendations, but do you think it's prudent to put in money right now, or would you sort of want to be up on cash and not make any fresh purchases into the market?
Not on an absolute basis. It's not that one shouldn't put money at all, but obviously one should keep some portion of your cash aside for possible opportunities in the future. That is definitely the case here. But still selectively, if one is getting good opportunities and good themes, one can still pursue those kind of opportunities. But yeah, on a net basis, it's best to be cautious and not be fully invested in markets. While you have to be invested to some extent, you can't just sit out. But at this point, you have to have some degree of cash reserve, and that would be completely a function of your risk averseness. Because given the overall situation, the mood of the global markets, wherein reverse flows from emerging market equities seems to be happening, and that could keep on happening till this hangover of QE rollback continues, which could be quite some time actually. So we should keep on getting opportunities for deploying cash at better valuations than what we are seeing currently. So that should be the overall outlook for investing in equities and in Indian equities over the next year or so.
Okay, it's very, very quiet at this point in time for the market. So we'll take a break and we'll wrap it up for you on the other side.
Hi, welcome back to the show. Just counting down to close. It'll be a very, very flat day of trade for the markets. The mid-cap index has done a better job today, but the Nifty, actually it's good to see that it's going into the event at least with a positive mind frame. So all three indices will close in the green. The Nifty has pulled back from the lows of trade and will close with just a minor gain of about 10 odd points or so. So Darshan, it would be pointless to ask you for a trade right now because obviously the news flow could go either way. So Mr. Tulsian, I'm going to ask you about one pocket that has moved today. Some of these rice-based stocks. Is there any news flow behind it, or is it just some momentary movement?
Sonia, when all the price stocks have gone up, there has to be some news flow, but I am honestly not aware. But generally, we have seen that whenever these stocks moves up, the rallies are not sustainable. So I'll be very cautious, taking a call on these stocks.
Mr. Tulsian, would you have a view on Punj Lloyd fundamentally? That stock has lost around 8% in 3 trading sessions.
See, Ekta, I have been in fact keeping my negative view on the stock purely on fundamentals for last 1 year, because the kind of margin compression or maybe the losses in their overseas contracts plus no clarity in respect to the debt reduction of about 4,500 crore lying in the books of the company. All these things are really seen quite negative, and I am keeping my negative stance on the stock even going forward over next 3 to 6 months view.
So Darshan, would you still hold your view that this market has an upward bias and perhaps could head towards that 5,900 to 6,000 level, notwithstanding the gyrations that this overnight event could bring in?
Yes, I would hold that view. See, what we are doing is we are chopping around, we are not falling. But we all understand that it's very difficult to anticipate what a big news event can do to the markets. But I would be, I'm going into this news event long, assuming that no matter how much choppiness that event creates, eventually the market will revert to its bullish stance, at least for some time, towards 5,900, 5,950. We'll find out tomorrow.
I just have one follow-up question, Sudarshan, because you've seen so many of these events, play out in the past. If all goes as expected, how long do you think these events play out in the markets? Does it take a whole day? Would you sort of get a clear trend in the first couple of hours of trade and then it would be, back to normal?
No, that's a good question. See, tomorrow we'll get a clear trend in the morning itself, because all the choppiness will play out in the US markets when after 11:30 in the night. So when we open, we'll have a clear view of what our market is going to do. But normally these events influence markets for 1 to 2 days, not more than that.
Gautam, would you have changed your strategy with the volatility that we've seen in the rupee? Would you have changed your equity strategy because of that?
Not substantially, but yeah, we would have recommended more IT stocks, HCL Tech and Infosys being the prime favorites within that. We're already recommending pharma names, so that's another sector which should benefit from the fallen rupee. So these two sectors are very obvious names where the stock prices should over a period of time benefit from the depreciation in the rupee.
Okay, thanks Gautam for joining us. We'll have to wind down the day, but before that, just one closing comment. Sudarshan, as a pocket, how does the oil and gas space look